Welcome to the November 17th, 2025 Advanced Report from McGowanGroup clients and NetWorthRadio.com listeners. What a week! The government is no longer shut down, and I thought we'd get a flurry of economic data. Well, it didn't come. I guess they took the rest of the week off and said we'll do it next week for inflation, jobs, October reports, and the normal reports that the markets feed on. So the markets are kind of flying blind without any economic data, but we found some. The first was Atlanta Fed said economic growth in the third quarter was actually 4%. Now they didn't get enough data to do the fourth quarter yet, but they did the third quarter, 4%. That is twice the average growth. So last quarter was just fine, but now we're going to get a flurry of economic data, including those inflation reports. So we wanted a preview. Now, I got two reports. One is right here. This is the number of net new jobs estimated by ADP. They process over 25% of the payrolls in the United States. In other words, they have a statistically significant data set, so they're much more reliable. Bureau of Labor Statistics, which hasn't produced any data because the government was shut down, well, they were 1.5 million jobs off, concurrent with Biden to Trump. But anyway, ADP continues to crank out their monthly data. October, 42,000 net new private payroll jobs. We'll see how the Bureau of Labor Statistics echoes that. We did have net new jobs were negative, lost jobs for 3 months out of the last 5. But these two overcome that. And so the labor market has way cooled off is the actual takeaway from this. The other evidence that the Fed may cut on December 10th is that Challenger Gray Christmas came out this week. They handle layoffs. So when you're going to lay off a bunch of people and you don't want them to sue you, you get Challenger Gray to come in and counsel them so that they don't burn the place down. Anyway, 153,000 net new or 153,000 net layoffs for the month of October, which was actually a 20-year high. The Fed already has enough data to start to cut rates more aggressively. That's important, and I'll bring you some of the takeaways that lead to 2026 allocation strategy. I am Spencer McGowan, your financial weatherman, president, founder, McGowanGroup Wealth Management. Thank you for tuning in, and we want to make it worth your while. This week's activity, whoa, what were these two? That's the NASDAQ 100. There is a rethinking of technology and AI going on. Let me give you an example on this. First, Michael Burry, he was famous for The Big Short. He bet against the mortgage market in 2007, made a bunch of money. But he got yelled at along the way. He deregistered Scion Asset Management concurrent with his Big Short position on Palantir, NVIDIA, and a few others. What he said was these companies are taking depreciation and saying, well, we don't have to report the fact that we're going to have to replace those chipsets in 2 years, 3 years, or 5 years, whatever it is. They're amortizing them too long, overstating earnings. That was his point. And that was shockwave number one. Shockwave number two, OpenAI, the information came out. Their business plan burns cash every year for 5 years. By 2028, they're going to lose $74 billion. And by the time they get to that point, their cash burn is about $100 billion. That's not a real business. They said, well, we're going to make a bunch of money in 2030. Well, that calls into question the whole AI data center frenzy. At some point, it's going to take a pause, and a lot of these companies are overvalued, and that's what the NASDAQ was trying to address. Now we go to the Dow. The Dow, a little more boring chart, that's year to date. I was showing you just the past 2 weeks on NASDAQ, but the Dow did give up nearly 1,500 points, lickety split really fast, and we started to recover at the end of the week. It does indicate something, and I'm going to show you the deep value solutions that we're building into the managed accounts, the fiduciary registered investment advisor model portfolios. Where are we going to go if we want to avoid an AI frenzy, avoid overpaying for things? So I'm going to show you smart versus not smart. All right? We don't want to do dumb stuff. So this, I believe, is smart. And just because we talk about it here doesn't make it a recommendation for your portfolio. BWXT Nuclear. They make the small modular reactors for ships and subs. They know how to do it. They make money doing it. They're part of the military industrial complex, and they have the regulatory approval. Well, that is a triple from the time that we first brought it into the portfolios. It gave back some of this. That's that AI thing, right? They went down $40 in this, but they make money and they've got rising revenue. Look at this. That company's worth $17 billion. Keep that figure in mind, about $17 billion. This company's also worth $17 billion. What do they have in sales? It's called Oklo Nuclear, right? They make nuclear reactors. But the problem is they haven't made any yet, okay? And they don't have regulatory approval. And that company's valued at about $17 billion. Which of those two companies would you like to have in the portfolio? Well, that's the kind of deep research McGowanGroup Wealth Management does. Oklo, that doesn't look like something smart to me. That looks like that looks dumb. And it's gone from 193 to 104. People are starting to wise up to the fact that their liquid sodium breakthrough was denied by the NRC because it catches fire, which is a disadvantage if you're trying to cool off a nuclear reactor. All right. Whoa, that's dumb stuff. All right, so the Bitcoin frenzy. Bitcoin hit 95,000 this week, right? Everybody loves digital beanie babies. Well, the top 10 digital beanie babies are down 25% in a month. Wow, that's not good. All right, so this is MicroStrategy. That's a Bitcoin treasury company. They're going to buy the Bitcoin. They're going to borrow money to do it, and they're going to sell more stock to buy more Bitcoin. Sounds brilliant. And it reached a high of 543. Now it's 195. It's gone down much faster than Bitcoin. It was a good way to leverage the downside. And it's going to be hard for them to sell stock. Remember, the AI mania don't do stupid stuff. This to me looks like a stupid thing to do. All right, what's this? This is that same time period. Remember I showed you the NASDAQ goes boom, boom. What's this? The S&P Oil and Gas Energy Index. It's only 2.6% of the S&P. At one point it was 25% because all the AI companies. NVIDIA is 8% of the S&P, by the way. Anyway, ExxonMobil. It's up nicely for the year. It was up nicely during the turbulence, and it was up each day during the turbulence. That's deep value, right? Not a recommendation for your portfolio till you get a plan from us, which you can do by going to Net Worth Radio. All right? These are high cash flow companies in a low cost ETF. If you said deep value, a dividend is evidence of a value company. When you get a big dividend and it goes up, that's a great thing. If it's a rising dividend, it's even better. Companies with high cash flow and a catalyst. This was remarkably stable during the turbulence. So you can see 2026 strategy. Well, you need a good bond strategy. I know people think bonds are boring and would just rather have NVIDIA. And that is the correct answer sometimes. But when things start to unravel, you really do want to have more cash flow to reinvest and to pay the bills if you're retired. Makes perfect sense to me. Last point this week, Warren Buffett, Berkshire Hathaway, doubled the S&P from 1965 through his retirement here at Thanksgiving, and he wrote his Thanksgiving letter. I'm going to give you just an excerpt from that, and I'll paraphrase what he said. Well, he said, decide what you would like your obituary to say and live the life to deserve it. There's a story behind this. Alfred Nobel, the Nobel Prize founder, also was the inventor of dynamite, and his brother died, and the newspaper put his obituary, which they had already written. He didn't like his obituary, so he founded the Nobel Prize series with an endowment so that his obituary would look like he wanted it to, rather than the one that was run early that woke him up. So decide what you want your obituary to say, live accordingly, subscribe to the Net Worth Radio McGowanGroup YouTube, and give us a like if we've added some value for your life. Thank you for tuning in today to Net Worth Media. We also have Apple Podcast. Simply type in Net Worth Radio and boom, it'll hit your phone right then. If you also go to networthradio.com on a browser, you're going to be able to meet the team. You can see our performance track record, the model portfolios that go with today's broadcast. Also at networthradio.com, the longer play podcast is available there as well. We're grateful that you've tuned in. Remember, when we talk about a security, it doesn't make it a recommendation for your portfolio until we actually complete a written plan for you by Zoom or in office or simply a conference call. So you reach us at networthradio.com if you want to get that arranged. Market fluctuations and how to handle them. We build high cash flow portfolios, and past performance doesn't guarantee future results, so you do have to be ready for challenging markets. We can build more cash flow during challenging markets than we can when everybody's happy and everything's up, which is when we tend to raise tactical safety. Those allocation strategies are here at networthradio.com. Thank you for tuning in.